Hi, this is Alan Gassman. I'm here with Kevin Cameron and Brandon Ketchrin. To give you a little bit of background, Brandon and I have been writing and studying and lecturing on the PPP loan program since it first came out. Kevin, a longtime friend and colleague of mine, practices as an independent CPA with a medium-sized CPA firm. He sent us a spreadsheet that was really impressive because it covered everything, but it covered it simply and it covered it eloquently. So Brandon and I had a couple ideas that we added, and we shared it with the Lineberg team at the Steve Lineberg Information Network. They really liked it. They had some good suggestions, and here it is. The purpose of this video is twofold. Number one, we want to tell you about the PPP loan forgiveness program and how it works. You don't have to buy the software, you don't have to use it, you don't have to know anything about Excel to watch this video and get a lot out of it. Secondly, for those who have purchased the Excel spreadsheet program, and for those who are going to purchase it in the future, we think that this will be a very good training video and orientation video, not only for sophisticated CPAs and tax lawyers, but also for the staff. In fact, Kevin's own receptionist is able to run these numbers under supervision and do a pretty good job at it. With the Lineberg team, we're able to give you a money-back guarantee and an ability for you to refresh the spreadsheet. So anytime the SBA makes a change, Brandon and Kevin and I are going to get together, decide what the change would be on the spreadsheet, make the change, we'll notify our audiences, and then you can immediately reload it and use the modified product. Kevin, before we get started, since thousands of people are going to be relying on the math behind the spreadsheet and the design of the spreadsheet, tell us a little bit about your background and track history as a CPA and how you put this together and how it's been tested.
Yes, I can do that. The background of my experience is working with small business owners, primarily in the area of accounting and tax compliance and tax planning, including merger and acquisition type activity. I've been doing that now for nearly 30 years on my own in a firm that I'm a partner in. And I am like most CPAs, Alan, I tend to solve problems by building Excel spreadsheets. So when the CARES Act came out, I naturally did that with the loan application process. I started a loan application Excel spreadsheet to help people compile the data for their loan application. And as soon as that tidal wave ended, I realized and had to change my focus to the forgiveness portion of this process, which I've learned that it's far more complicated than the loan application process. And we have worked on this for a while. It started out in its infancy was a single page spreadsheet. That's what I sent to you and Brandon originally. If you recall, it was just to get your opinion on it. And you said, this is great, and we need to take it further, and we've taken it further for sure.
So can you explain for the layman what this is exactly? It's an Excel document that's been programmed and that also provides informational background. How do you explain this to a client? Exactly what this calculator is.
How I explain it to a client is it's a very, very simple input spreadsheet, pretty self-explanatory for most of it. The hard parts have all been drilled down to formulas that we've tested so many times now. It's incredible, but it's really a guide for not just calculating the forgiveness amount or the potential forgiveness amounts, but also for tracking the expenses. We heard from a lot of people early on that they were going to experience a great deal of difficulty in tracking the expenses. What do I track? What do I count? And you know, even as of Friday night, we are still getting some guidance that leaves probably more questions than answers, but we feel like we're at the point now where we have got to start getting this data into the spreadsheet and get the application process going, because we're probably a week to 2 weeks away from the first borrower needing to turn into their lender the forgiveness application.
And Brandon, why is it important to get that application into the lender without delay?
Yeah, and one of the main reasons why we think it's important, just to get that out and get it done is these rules are constantly changing, and they could change for the worse. The SBA could issue more limitations that provide, that we can't take certain expenses into account. But they have issued rules that said if you submit your application, then you can rely upon the rules that were in place at the time you submitted that application. So we think it's important to go ahead and get this and track your expenses as you go. So that way, as soon as you're 8 weeks in, you're ready to roll. You can use this spreadsheet to fill out the form and submit it to the lender and get those loans forgiven based upon the most favorable rules that we think, because we think that it's only going to get more limited from here.
So Kevin, do you want to start guiding us through the spreadsheet and guiding us through the rules? And again, many of our viewers have a PDF of the spreadsheet in front of them, but they don't have the Excel version, and they may not even buy the Excel version. They just want to know more about how the loan program works.
Exactly, and they can learn from just watching this for sure. So I'm going to take you through the spreadsheet, starting with the expense tracker, and you'll see that on the Excel spreadsheet, any cell that needs data or requires data is simply light blue. So it kind of gives you some guidance as to where to enter data and what to enter. In some cases, there are specific instructions on what to enter. If you look at any cell that has a little red triangle there in the corner, might not be red on your screen, but it'll be a triangle in the corner. That's just a comment attached to that cell that gives you additional guidance and information. Some of that guidance is directly from the SBA, whether it's the application or one of the interim final rules. In some sections, you'll also see some comments from me. And those are comments. Don't take them as tax advice. You need to make sure that you follow the rules as you see the rules apply to you. But in this experience, we've come across a lot of questions and probably more questions than answers still. But that is some guidance that you can get there. And we'll go through some of these. You can see that like on the covered period, we specify what the SBA defines as what the covered period is. By now, I think we can pretty much say that in our sleep. But I'm going to take you to the beginning because everything starts with who you are and the company name is entered here. You only have to enter certain data one time and it'll flow through the entire spreadsheet. For our CPA friends or other consultants or advisors, you can see my firm name, my name, and my telephone number and my email address is a hyperlink. You can change all of these cells here to customize your spreadsheet for your client-specific needs. Going down, the next thing you have to enter, it's the only other item that's really imperative, I think, is your loan funding date. And now we know that your loan funding date, no matter what time of day it occurred, is your first day of your 8-week or 56-day period, covered period. Simple formula just adds 55 days to that first day, and that gives you the end of your 8-week period. That's a formula built into it. And you can see in the spreadsheet, we've left all the formulas to be viewed. We feel like this is important for people to understand better how the process works. It's nice that the number gets calculated automatically, but we want everybody to really be knowledgeable on how we came up with these amounts. And you'll see that throughout the spreadsheet. We all know now, or should know by now, that if you're a borrower that has a biweekly or more frequent payroll period, you can select this alternative payroll period. And you can see there's quite a bit more information, both from the SBA and from the, from my comments. I think the big concern we have there is we're still not 100% sure on the paid or incurred and paid and incurred language that we've gotten from the SBA and Treasury. Some people believe that if the payroll is paid within that 8-week period, no matter when it was for, then it would be counted. That might be correct, but then we're wondering, why is there an alternative payroll period? So that date here would be very simply the first day of your payroll period that falls after your loan funding date. So in this particular example of this company, they're loan funded on April 17th, which I remember correctly might be a Friday, but their payroll period, their first payroll period that starts after the loan funding date was April 22nd. So their alternative date starts on April 22nd and ends on June 16th. It's not a requirement that you do that. The SBA has made it very clear that that is for administrative convenience for a borrower. We also know that some of the payroll companies, such as ADP and Paychex, are going to provide their customers with customized reports. They did the same thing in the loan process. Some of them weren't completely accurate. I think ADP and Paychex and those other types of companies were doing the best they could with what information they had. But if you do get a customized report from your payroll service, test it. Just make sure that the numbers are right. And if you do and the numbers look right, I can show you in the expense tracker how you could literally enter all that data on one line item if you'd like. The next item you need to input is in cell C19, and it's just the loan amount that you borrowed. Very simple, pretty straightforward, comes right from your loan documents. We're going to get into more of the detail now. And in this example, I kept it a little bit simple, but once I walk through it, I think you'll understand. So if this company, sample company, decided to use the alternative payroll covered period, their first payroll that would be counted in the 8-week period would be the one that falls on May 6th, because that's the first full pay period after the start of the alternative covered period. So that's why that date's in there. And you can see in this case, sample company uses like QuickBooks or something like that to keep track of their payroll. They simply run a payroll summary and they enter the data in here, which is really simple. It's just your gross payroll. So keep that in mind. A lot of people there's a lot of numbers on a payroll summary and it can be very confusing. And sometimes even the definition of gross payroll can be confusing. So you're going to have to make sure that your report provides that total, which every report I've ever seen does. So I think you're okay there. Before going any further, I want to just hover on all of the cells that are here in the header. They're light yellow because they all have information in them. Some of them are pretty straightforward. Just give your basic description of what the item is that you're paying. We talk a little bit about the date the expense is incurred, some advice on the date the expense is paid. This is particularly important for expenses that are paid after the 8-week period, which we'll touch upon a little bit. Gross payroll, there's a definition there for gross payroll. We now know from Friday's guidance that bonuses and hazard pay can be included now. So that's some additional guidance that we were waiting on. We don't know if there will be any type of anti-abuse rules relating to excessive bonuses to team members or family members working in the business. So I caution you to use your better judgment in bonuses that you pay to your employees. But I will point out that bonuses paid to your employees will automatically increase your loan forgiveness, not just for the payroll cost, but also because of the limitation related to non-payroll costs. So there is a double benefit, if you think about it, to increasing your payroll cost. We'll talk about that a little more in a few minutes. Health insurance, a little bit of guidance that we've gotten from the SBA has been a little bit confusing. The statute specifically references group health insurance. The instructions that the SBA have provided us don't specify group health. They say employee health insurance and other terminology. I think that the SBA has got us a little bit confused on that. We'll talk about that as well. On the next column, state and local payroll taxes. We're in Florida, and Florida only has a state unemployment tax. But if you're in a different jurisdiction, say even a city that has, or a municipality or township that has a local tax assessed against the employer, then you would count it here. If it's a local tax assessed against the employee, it's a withheld item and it doesn't get included here because you are starting with the employee's gross payroll. So remember, these are state and local payroll taxes assessed to the employer. retirement plan contributions. There's probably been more discussion on this topic than I care to think about, but it's very problematic in that retirement plan contributions are not paid, or they're very rarely paid per pay period. There are some companies that have simple IRA plans or 401k plans that maybe have a safe harbor provision in them, and those contributions or those matching contributions paid by the employer are very often done per pay period. For those of you that have that, you simply just pull that amount from your payroll records and drop it in here. The real question becomes this paid or incurred conversation that we've been having, and the guidance that we've been getting from SBA. It's gotten us probably more confused than not, because we have many borrowers who have retirement plan contributions that are employer paid for, say, the year 2019. And if you're a calendar year end company, your contribution might not be due until September 15th, 2020, if you've extended your tax return. So if you pay that during the 8-week period, instead of waiting until later, can you count it? And presently, our advice is probably so, until we get better guidance from the SBA. And I'll point out here, I'll kind of stop here for 1 second, and maybe Alan can even expand on this, and Brandon did briefly. If you're coming up close to the end of your 8-week period and some of these items have not been paid, you might want to pay those if you can afford to and the cash flow allows you to, because you might be turning in your application before there is final guidance issued. And your lender might have to accept your application based on that guidance. We don't know if the SBA will tell the lenders not to, because we all have to realize there are 2 timelines now that the lender and borrower responsibilities in the rules issued on Friday indicate that the lender has 60 days to review, approve, or deny the application for forgiveness. And then the SBA has 90 days to make their final determination before they actually pay the bank for the forgiveness amount. And the reason why I mention that is that's a total of 150 days. A lot can go on in 150 days. And it's quite possible that an early applicant for forgiveness might get their application kicked back to them because of that. We might get guidance that comes out afterwards, and the lender comes back to you and tells you that you have to revise your application for that purpose. So I think we're going to all have to stay pretty flexible in this process. The next column is, go ahead, Alan.
I just want to say that I think the best strategy, if in doubt, pay it out. What you pay during that 8 weeks is paid during the 8 weeks. And if it's for expenses that were incurred before the 8 weeks started, that might be okay. If it's expenses that are incurred after the 8 weeks end, that might be okay. We don't know. There's some chance that people who apply early will be able to do that, and people who apply late won't.
That is correct.
If in doubt, pay it out.
I like that phrase. Might have to get a T-shirt with that on that, Alan. Next category, and this is where when in doubt, pay it out might not actually apply, because it's the only area where we've gotten some stronger or definitive guidance on payment, and that's on the payment of mortgage interest. And they have clearly stated now that you cannot prepay any mortgage interest. They didn't state whether or not I have a payment in arrears. Maybe I'm late on a mortgage payment, or my bank allowed me to defer a payment for a month or two. If I pay that payment within the 56-day period, can I count the interest? I would rely on Alan's just recent advice and say, yes, pay it and include it in there. And we'll have to see how that turns out. But I agree with Alan on that comment. On rent or lease payments, we've commented on this before. That is a broad area. A lot of people thought originally that was strictly commercial rent on my commercial building or something of that nature. And now we know that it's really rental payments on any leased item that you have. Excuse me. It includes related party leases. There isn't even any guidance on whether or not the lease technically has to be arm's length. But I would believe that it's got to be arm's length. The rental rate should be reasonable, probably can't be modified. If you've been paying below market rate rent, you might want to consider modifying that to market rate rent. I don't think Alan would recommend that we double or triple our rent because it probably would fall under some form of anti-abuse clause that I'm sure we're going to see at some point. But again, you really never know. There's been some question and confusion on whether or not a capital lease counts. And for those of you that don't know what a capital lease is, a capital lease is just a lease that really is more like a loan. Say you've bought or you've leased a copier, and at the end of the lease term, there's a bargain purchase option, or you can buy the copier for $1, and then you own the copier thereafter. That's generally considered a capital lease. There are some other tests to determine whether or not a lease is a capital lease. But if it's a capital lease, we probably should not be including it. It might be one of those items where we list separately on the spreadsheet and know that we might have to delete it later. And the reason why we're telling you that is because in some of the instructions the SBA has provided as to which lease payments to include, there's one section of advice for sole proprietors and self-employed people that say rent or lease payments that are deducted or deductible on Schedule C are those that you count. Generally, capital lease payments aren't deductible per se. They are like a loan payment, and there's interest and principal portions to each payment. So if we rely on that small piece of advice that we're getting on sole proprietors and apply it to all business owners, capital leases might not be includable. But again, that might be one of those areas where we list it on the spreadsheet in hopes that it can be included. Utilities, we've had a lot of discussion as far as utilities are concerned, and there's some guidance there as well on that. And then if you come to the last column, all we've done there is we've listed a line there where you can make sure you've got the documents to support the expense item set aside. I'm recommending that people scan those documents as PDFs into a specific folder. And the reason why is because I think the majority of lenders are going to use a portal for the loan forgiveness application process, and you're going to have to upload that data anyhow. So why not start saving those documents in a file folder that you can simply drag and drop into the portal when the time comes. We've also added a link here that takes you directly to the SBA's instructions.
Wow.
We recognize that not everybody has these instructions sitting on their desk right next to their telephone or computer or whatever. I think I've been sleeping with these under my pillow for the last week and a half now, but we've listed them here. And the nice part about this is this is a link directly to the Treasury's website. And so it's interactive, so you can actually go to other guidance that they reference in the instructions and click on that and get additional guidance. So that's really helpful from that perspective. So keep that in mind. Going into the spreadsheet, I'm going to focus primarily on sample company. Real quickly, I'm not going to go line by line. I'm going to just kind of go over the expenses. And you can see that in this expense listing, there are some items that are listed as prorated under the old guidance that maybe we had to prorate expenses. We're not so sure we have to prorate expenses any longer, so keep that in mind. But in sample company's case, they've entered a line item for every expense item that they have, whether it's a payroll cost. And keep in mind, payroll cost is these 4 columns right here. Columns E, F, G, and H, that's all constitutes your payroll cost. And then everything beyond that is, everything beyond that is your non-payroll cost. So keep that in mind. So as I enter all my expenses for my different expense categories for payroll and non-payroll costs, I'm entering my payroll, not by employee here, but just by summary, by pay period, my unemployment taxes, my health insurance, my mortgage payment. I have a rent payment as well, all the basic expenses you have. There are some people that are trying to create a separate account in their accounting system to post these expenses to. I generally don't recommend that because it can mess up your accounting system. But if you do that, you can always go back later and reclassify those items to the proper category. If you did something like that, you could drop totals in here for that 8-week period, and you wouldn't necessarily have to issue each line item in the expense tracker. But what we have found is the expense tracker has probably been the single most important help to a small business owner, because a lot of people were confused as to where do I track this data? Where do I put this data? SBA didn't give me anything in their instructions. My accounting software doesn't identify PPP expenses necessarily. So using the tracker, I believe, will really help. I also believe, although not required, obviously, that turning the tracker into your lender might really be a wise move on your part. It's going to show and be evidence that you have made the effort to properly document the expenses for the forgiveness. We now know from Friday's guidance that the SBA is going to require a lender to provide minimal review of the documents. That's a very interesting word, minimal. So I believe that if you provide really good documentation, clean documentation to your lender, they're going to do a minimal review on that documentation and bless your application, hopefully. So the cleaner, the better, the more accurate your data looks, appears, and is, the faster you'll get this forgiveness taken care of. Alan, any comments on that?
Could you go back to that slide, Kevin? Very quickly. Let's go back to where we were. No, I'm sorry. No, back to the first page of the spreadsheet.
There.
Okay. Yeah. So if you can go to the top so we can see the categories.
Yep.
All right. Real quickly, Kevin, I think a lot of viewers are probably Schedule C taxpayers. They're not S corporations or C corporations. They file a form, Schedule C form 1040. In 1 minute or less, how is it different for them? Should they use this spreadsheet or should they use a simplified version?
Alan, I believe this is a simplified version. That's the beauty of this spreadsheet, is it can be for a single owner Schedule C, and it could be for a company that is quite large, hundreds of employees necessarily. But the nice thing about this is we all now know that if you're a sole proprietor, your compensation for this 8-week period is simply 8/52 of your net Schedule C income for 2019. So let's ignore all these line items here, and we could simply type in, you know, owner or whatever you'd like to call it, compensation here. And quite frankly, we could actually add a formula, Alan, if the person is Excel friendly. And let's say that person's net Schedule C income was $66,000 in 2019. If you just enter 66,000 divided by 52 times 8, you get what my salary, that's my compensation. You wouldn't have to enter a single item on that spreadsheet again besides that number for a sole proprietor. Now, sole proprietors can still include their non-payroll costs, their mortgage interest if they have it, their rent and their utilities. All those items are still included for a sole proprietor because those are deductible on Schedule C. That might be a little more complicated because a lot of sole proprietors will have, say, a home office deduction, Alan, and that home office deduction might include mortgage interest, and presently we believe that would count. That would take a little bit more work on their part to calculate the mortgage interest paid during the 8-week period and then multiply it times their home office percentage. So that's a little bit of calculating they'd have to do on their part. Rent or lease payments might be the same if it's a home office or if they lease their vehicle for business purposes or rent a copier. that wouldn't require an allocation because it's simply a 100% deductible item for, say, a copier lease or an office lease. Utilities, their cell phone, if it's used for business purposes, or a landline or internet or other deductible business items would be included as well, Alan. So the point there, Alan, is that this spreadsheet would work for a sole proprietor. They probably would only end up with maybe 8 or 10 entries at most on this spreadsheet. Don't be overwhelmed by the fact that there's room for 46 lines. The spreadsheet can be reduced in size if somebody wants to make it a little smaller, but you don't have to enter an amount on every line item. Does that make sense?
Yes, very good. And a sole proprietor would not be able to reduce what they owe by health insurance costs or retirement plan costs for the proprietor themselves, right?
Presently, that was some more recent guidance we got, which it contradicts the loan application process, but that is true. Right now, we don't include sole proprietors or general partners, retirement plan contributions, or health insurance. Going back to the sample now, I want to go down to the bottom and show you that the total payroll that's listed here is your gross payroll for the 8-week period. You have to further reduce that number for any individual employee whose compensation exceeds $15,385 for the 8-week period. So in my example here, Bob, Mary, and Jane all received compensation that was greater than that amount for the period. The current guidance we've gotten from SBA also further reduces, or possibly further reduces, an owner employee's compensation to no more than $15,385 or 8/52 of their 2019 compensation. There is some question as to whether or not that applies to C and S corporation shareholder owner employees, or whether it applies only to self-employed individuals and general partners. So we might see some further guidance on that. Presently, the Excel spreadsheet includes that additional possible limitation. So in Bob Sample's case, Bob didn't make over $100,000 in 2019. He made $96,000. So Bob gets a slap on his wrist, or the company gets a slap on its wrist, and has to cap Bob's compensation for this 8-week period at $14,769. So you just drop in the amounts in each one of these lines here for each individual who might have been over the $15,385. The purpose for that is so that we can reconcile our expense tracker to our payroll detail. So the total modified payroll now in my sample company is $76,119. Before I go on to the PPP Schedule A worksheets, Alan, do you have any other questions on the expense tracker?
No, Brandon, do you?
Yeah, no, I think just one question is, would you recommend that they fill this out as they go, or wait towards the end of the 8 weeks, or what's your thoughts on that, and what advice do you have with respect to that?
Brandon, given that a lot of people are already into their 8-week period, say you're in week 2 of your 8-week period right now, I would start filling this out now, because I'm not sure about other people, but my memory isn't as good as it used to be, and I can't remember what I bought 8 weeks ago. So if I fill it out maybe every few days, or maybe go into it once a week or something along that lines, I'd rather do that. And there's a reason why I'd rather do that. One of the strategies I believe that a business owner can take in this matter is, and I mentioned it earlier, is if you keep a running total of your expenses. So say, for example, in sample company's case, I didn't put in all 8 weeks worth of data. Let's say I only had 4 weeks worth of data. If I have filled out the other information, I can go all the way to the loan forgiveness application and see how much of my loan is already forgivable. And the reason why I think that's really important is because if you're shooting for 100% loan forgiveness, which I suppose we all should be hoping and trying to do, wouldn't you rather know now, say in week 4, week 5, week 6, than day 52 or 53, and you call in your bookkeeper and say, we need to pay some more bills because, or we need to pay some more payroll, or, oh yeah, let's pay some bonuses. I also think, and Alan can comment on this, Brandon, you can too, I think last minute cramming of expenses might look kind of suspicious to a lender. So let's do it methodically. Let's do it proactively during that 8-week period.
Agree completely.
I'm going to take you now to the PPP Schedule A worksheets. It's one worksheet, but the SBA on their their forgiveness application has called it worksheets, so don't be confused by that. It's really just made up of 2 tables in the forgiveness application. And this is where you start entering your specific employee data. And it's important for 2 reasons: the payroll calculation and how much payroll you paid each employee, and also your FTE calculation. And there's a 3rd reason, and that is for certain employees, and those are employees that make less than $100,000 per year annual salary, or were not employed during 2019, you might have a reduction in compensation, salary or hourly wage rate reduction to your forgiveness. And I'll talk about that in a minute. So it's quite simple. You just enter the data relating to each employee. The employer identifier, I'm not sure why the application didn't just say enter the last 4 digits of the person's social security number. Instead, the SBA called it the employee identifier, but it is the last 4 digits of the person's social security number. The next column, there's some guidance here from SBA with respect to what is cash compensation. I've had some people ask me, I don't pay my employees in cash, I give them a check. Don't worry about that. Cash compensation means any form of payment that you give your employees. So there is some guidance on that column that you can click on, but generally you're going to just add the employee's gross pay for the 8-week period, not to exceed the $15,385. Keep in mind that $15,385 limitation is for any employee. It's not just for owners, managers, key employees, it's for any employee. We now know that an FTE, based on the guidance we received, is a 40-hour work week. Somehow they decided to use 40 hours. The SBA says because it better matches the spirit of the CARES Act written by Congress. I didn't see that anywhere, but that's what they're telling us. It's important to mention that the term FTE is mentioned 11 times in the CARES Act, but the CARES Act failed to define it. So we were left to the definition that the SBA was going to make us follow. So if you have an employee that works 40 hours and averages 40 or more hours per week, then you would just answer that question yes, and they automatically become a 1 for your FTE count. I've had a lot of people tell me, well, I have a salaried employee and they might work 38 hours one week and 39 hours another week, and then the next week they work 42 hours. I believe that is a full-time employee. I don't know if the SBA is really going to make us split hairs and average their hours for this 8-week period. And if they were, say, only 39 hours a week, we're going to have to go back and change it. I believe that if you got a full-time employee that is salaried, you get them as a 1 for the FTE count. If they work overtime consistently, let's say you have a star employee who shows up before everybody else and leaves after everybody else and works 60 hours a week, you cannot count that person as 1.5 FTEs. Although he or she might like to be counted as 1.5 FTEs, they can't be counted that way. If you've got employees that are part-time, you simply say no to the question, and then you've got to enter the number of hours they worked for that 8-week period, and it is their actual hours worked. If you don't keep track of your hours, that might be a problem for other reasons, but if you don't keep track of your hours, you are allowed to use a default that classifies all your employees that are part-time as a 0.5. So again, that's for, I think, administrative convenience and ease. You do need to be a little bit careful with that, because you could end up having a lot of employees that say work 30 hours a week and therefore would be a higher FTE count get automatically reduced to a lower FTE count. But it could also work in your benefit, and I'll give you an example. And this is a real example that I'm working with somebody in California. They own a fast food restaurant, and prior to the COVID outbreak, their employees generally averaged about 22 to 23 hours a week. And then after the outbreak, they've hired back some employees, and the average hours of those employees are running at about 14 hours a week. So if I had 18 people working 22 hours a week, and now I have, say, 15 people working 12 hours a week, I would probably want to use the 0.5 calculation, because all 22 are considered 0.5 each, which equals 11 FTEs, and my 18 part-time people only working 12 hours a week or 15 hours a week are going to be counted as 9 FTEs. So you can see that although I dropped a lot of employees, my FTE count doesn't go down as much. So really pay attention to that if you run a business that has a lot of part-time employees. Again, in this case, go ahead.
Quick. I think that's one of the benefits of your spreadsheet here, is that it allows you to enter in this hourly information, and you can see whether I use the actual hours, or if I want to make this election, you can, look at it both ways, see which comes out to your benefit, and without having to actually, write stuff down on a piece of paper. It can be automatically here in Excel.
Not at all. If I simply just answer a yes, and it doesn't have to be capitalized or not, but if I answer a yes, it automatically changes my FTE count to the 0.5 here. If I answer no, then it lets me calculate my actual FTE number rounded to the nearest tenth. I do want to point out that in the guidance we received on Friday, in the example that the SBA provided, they didn't round their FTE count in the example to the nearest tenth. They did it to the nearest hundredth. So I'm not sure if we're going to have to change this formula, or they're going to have to change their guidance. We'll see. Right now, we're going on based on what the application instructions are. The average FTE guidance, we even though it's not a cell you enter data into, we've provided some additional verbiage there that's language directly from the SBA on the FTE count. The next two columns are columns that we haven't focused a lot on in my business, primarily because in a survey of 205 clients that got PPP loans, we had one company that reduced any employee's salary or hourly wage rate by more than 25%. And there was some confusion on that originally, because if I reduced my employees' hours by 25%, do I have to count that against me? They didn't change their rate. I pay them $15 an hour before COVID. I pay them $15 an hour during COVID. Am I penalized? A lot of people thought they might be penalized for that, and you're not. It's clear now that you are only penalized if you drop somebody's salary or hourly wage rate. That's important to focus on the word rate, by more than 25%. And it doesn't apply to any employee that was making over $100,000. So let's say you're a business that have 5 key managers, and each manager makes $180,000 a year. They run the business for you, so to speak. And COVID hit, and you went to these 5 managers and you said, guys, I can't afford to keep paying you $180,000 a year. I've got to drop all of you to 90. As soon as this mess is over, I'll get you back up to 180. You're not going to be penalized for that. You might be penalized because the managers might not be happy, but you won't be penalized in the calculation. So I believe that the spirit of that reduction was there was a lot of concern, and in speaking to some politicians that I've spoken to, there was a lot of concern about that businesses might hire back employees at a lower rate and sustain that rate going forward, and it would hurt the say blue collar, rank and file employees. The fact of the matter is I've spoken to very few employers that have sought to take advantage of their employees in this process. I think that they're trying to do the best they can for their employees and stay in business at the same time. I think Congress was It's a good example of maybe where Congress doesn't trust small business owners too well for whatever reason. That's my only commentary I'll make for today. Table number 2, which comes from the PPP Schedule A worksheets as well, that's for employees that have an annual salary of more than $100,000 a year for any part of 2019. So if I started 2019 making $120,000 a year, but for whatever reason my boss lowered my pay to $90,000 during 2019, you still put me down here in this category, even though I'm making less than $100,000 currently. So in this example, you'll see that it's still the same as above. The only difference is we drop off the columns relating to salary reduction, because there is no penalty for salary reduction for these highly compensated individuals. But here you still list all the other information. Somebody making over that amount might not work full time. I plug that in. If you look at Doris' sample, Doris works part-time, even though she historically has made, in 2019, made over $100,000. So you can see that the FTE count still applies here. But generally speaking, I believe that most counts, the table 2 employees are going to almost always be 1 FTE per employee, just based on that salary level. The Excel spreadsheet that we've created here adds an owner's compensation table. The instructions to the forgiveness application don't provide any documentation at all on accumulating this data. It just tells you to put the information in on a specific line in the application. We felt like our business owner users would like to have that data, or a spot for them to enter that data. So in this case, with sample company, Bob and Mary are the owners, and we've entered their salary. You can see, reflecting back on the original expense tracker, if you recall, Bob only took a $96,000 salary for 2019. And so Bob's cap is not $15,385 like his wife Mary is, or his sister Mary maybe. His cap is $14,769. Till we get further guidance on this, this is what we're relying on. And here you can see, where do I get that data? What was Bob's compensation for 2019? And you generally pull it from box 5 of Bob's W-2 for 2019. Keep in mind that sample company might have used 2 different payroll services. They might have used a PEO during 2019. So you might have to pull from more than 1 W-2, but you still enter their total compensation for the year. Once we enter all that payroll data, you can switch over to Schedule A real quick, because you're going to get this nice little message here that says, hey, guess what? Your payroll data equaled your expense tracker. You're good to go. If you don't get that answer, say for example, I come back over to my expense tracker and I'm just going to put $1 here, and then I come back to Schedule A, I've made a mistake. My payroll input doesn't agree to my expense tracker. The reason why I think that's really important is because I can guarantee you the lenders are going to look at your payroll records. So we want to make sure that those payroll records agree to the payroll detail by employee. That was one aspect of the tie-in between the tracker and the Schedule A worksheets that we felt was really important to provide to the user. So go back. You can see that once I take that out, I got my nice message. You can see it's a simple formula, no rocket science there. It just does it for you. Once I go and entered all my payroll data, I'm going to go down to start talking about my FTEs, and there is some additional language and guidance from the SBA with respect to our FTE count. Here, we're going to start entering some of our reference period FTEs that are going to become really important in this process. We've got FTEs that we need to enter for what the period is. I guess we call this our COVID period. This is the February 15th, 2020 to April 26th, 2020 period, and it's your total average FTEs. In a future release, we are probably going to integrate a spreadsheet that you can put data in to calculate this, but presently you could use these spreadsheets up here and enter that data for that specific period, save that as a separate worksheet, and that would give you the total that has to come down here into this box here. We do the same measurement here. This is the average FTE for the payroll period that included February 15th, 2020. A lot of people have gotten confused by that because they think it means the FTE count on February 15th, 2020, and it doesn't. It simply means if you take the payroll period that straddled February 15th, 2020, whether it was a weekly payroll, biweekly, whatever payroll measurement period you use, you would go back to that payroll for that specific period of time and count your average FTEs. And the reason why that's so important is because this is to measure your restoration of your decrease in FTEs during that period. So you can see in Sample Company's case, they started February 15th on that date or that payroll period that covered that date. They had 10 average FTEs. But for the actual period, February 15th to April 26th, they only averaged 9 FTEs. So did they have a decline during that period? The answer is yes, they did. Having that decline means they can possibly meet the safe harbor for the restoration of their employees by June 30th or an earlier date. So in this case, Sample Company did not meet the restoration of their average FTEs by June 30th, and therefore they do not qualify for the safe harbor. So all of these dates are very important for the FTE measurement calculations, and we'll go to that. These numbers then flow directly to the PPP Schedule A worksheet, which is also part of the forgiveness application. And here, much of the data here comes from the other two sheets. I want to emphasize that you really want to do these in the exact order they're in here: Tracker, Schedule A worksheets, Schedule A. But I do want to point one thing out, and that is this one safe harbor, if you will, and that is if you're an employer that never reduced their employee count, never reduced their average paid hours of their employees working from January 1st thereafter, then you don't have to worry about all these FTE calculations. You literally get a buy and you're in. So that's actually, to me, probably the place I would start with before I really even enter any FTE data. If I go back and I say, well, I really never made any changes. I didn't fire anybody. I didn't cut anybody's hours. I didn't cut anybody's pay. I'm the same I was now as I was then I think that you just answer yes to this, and it is a self-certifying question on the application. Now, I'm not telling anybody to cheat the system and say yes when they don't really qualify, because you still have to retain the data to support the question, or support the answer rather to the question. But I think that's really important to point out, is that if you've never made a change to your employees, your hours paid, all of those things, then you just answer yes to that, and your loan forgiveness FTE quotient becomes 100% automatically. So keep that in mind, everybody. In Sample's case, because I want to show you the math, I didn't answer that yes, because it would have made this the result simpler, but wouldn't show you the math on how things are calculated. So in this case, Sample Company didn't meet that criteria. And I'll show you in a minute. If you answer that yes, you get an automatic 100% potential loan forgiveness. Now we go to the reference periods, and these again are just 2 reference periods that the statute picked out that for comparing the FTE for the company, the FTEs for the company. And they are for a period of February 15th, 2019 to June 30th, 2019, for the period January 1st, 2020 to February 29th, 2020. And then if you're a seasonal employer, you're allowed to pick any 12-week period that falls between May 1st, 2019 and September 15th, 2019 that gives you your lowest average FTEs. So if you're a lawn care company or something of that nature, you would actually put in you'd answer that yes, and you'd put a number in here. The formula is going to automatically pick whichever is the lowest number for your reference FTEs. Think of that as just call those your reference FTEs. The reason why that's so important, the lower the number, the higher your ratio, so it'd be in your favor. The next part of the computation is the FTE, the average FTEs for the formula up here, which is simply FTEs for table 1, FTEs for table 2, equal your average FTEs for your 8-week period. The Fte reduction exceptions, which they've talked about a great deal recently, which are actually very pro-borrower friendly, because now if we tried to hire people back and they didn't come back and we can document that, we can get credit for that. And I'll show you in one moment how that can make a big difference in your calculation. If you terminated an employee for cause, you can count that person still as their equivalent FTE. If you had an employee who elected to terminate employment, they quit on you, document it, and you can count that as well. If you've got an employee that requested a reduction in their hours, then you can count the equivalent for their FTE for that reduction as well. I left all these blank for right now, but I can show you how that changes the calculation. So in Sample's case, their lowest reference period FTE was 8. Their average FTE for the 8-week period was 7.1. Thus, they get an 89% FTE quotient. So that number flows automatically to the application. The last worksheet, and I'm sure you'll take a deep breath here and thank your lucky stars, none of this worksheet requires any input from you. Once you've entered the data on the 3 prior worksheets, everything that flows to this worksheet is a calculated number. It gives you your total payroll costs, which if you recall were the gross pay, the health insurance, the retirement plan contributions, and the state and local employer taxes. Your total mortgage interest payments paid during that 8-week period, the total rent and lease payments paid during that 8-week period, the total business utility payments paid during that 8-week period. And I know some of you have seen the instructions that these expenses can't exceed 25% of the loan forgiveness. Don't get too hung up on that if the total of these items do equal greater than the loan forgiveness amount, because the loan forgiveness amount is already reduced for any excess by the payroll limitation that occurs. And I'll show you that down a little bit further below. We know that we have to reduce our eligible expenses by any salary and hourly wage reduction. Like I said earlier, I don't believe that's going to apply to a lot of business owners, but in Sample's case, I put a number in so you could see. So in this example, our Sample company has $112,699 of adjusted qualified PPP loan forgiveness expenses. The FTE reduction quotient is 89%, which technically means I'm losing 11% in loan forgiveness. They did it kind of in reverse. So in this example, I multiply the 89% by the 112, and my modified loan forgiveness is $100,020.36. My original loan amount was $120. That comes from the expense tracker, where you entered that here. So be mindful that you need to make sure you put the right amount in there. My payroll cost limitation on the loan forgiveness would have been $116,265.33. My actual loan forgiveness here is the lower of these 3, which is the $100,020.36. Ellen, Brandon, do you guys have any questions before I move on to just showing a couple quick examples?
Yeah, I think one of the nice things about this page here, this loan forgiveness application, is this does match up line for line with the actual application itself. So when you go to fill this out, you have all the data here. You're just simply copying and pasting it over or filling in the amounts on the fillable PDF. So it's very easy to reference back to this when you're actually filling out the application.
I'm just in awe at how good this is. You did a great job on this, Kevin. What's
Thank you.
next?
So let's go, and I'm just going to not take too much more time. We've run a little longer than I was hoping, but I know it is a little time consuming. But I want to show you for an example, and it's going to mess up the calculation a little bit, but let's not worry too much about that. You can see in this example, I didn't achieve 100% loan forgiveness because I only hit 89%. So we'll talk about that in a second. But how can I get, and you can see here, these expenses here, when I add them up, are more than 25% of the loan forgiveness. It's okay because the loan forgiveness is still capped, because the real 25% cap occurs on this line here, everybody. So if you go back to the expense tracker, and let's say that I paid everybody bonuses, and I gave $10,000 in bonuses, I'm going to go back to the spreadsheet, and I got to add one more line item here. Not going to worry about distributing that among the employees. But now my payroll amount is $97,199. So I've spent $10,000. Keep that in mind. I've spent $10,000. And now my loan forgiveness is $108,895.36. So what that tells me is I just gave my employees $10,000, but it really only cost me about $1,100 because I'm getting $8,900 more in loan forgiveness. And this is why I think there's so much strategy involved here, is that by adjusting what expenses you pay in the payroll category, you end up increasing the possibility or the likelihood of a greater loan forgiveness. Now let's take that to one other extreme. And Alan, we've talked about this many, many times. Let's say that sample company has a $25,000 retirement plan contribution payable for 2019, and they decide out of their goodness of their heart that they're going to pay it during this 8-week period. That automatically increases my payroll costs now to $112,199, which increases my loan forgiveness to a maximum of $120,000. And the reason why this is so important, everybody, is because remember, I still didn't get my FTE quotient. I never met my FTE quotient, but yet I'm still getting 100% of the loan forgiven because I was able to amp up my payroll costs. So this is why you'll hear us say many times, and what is the phrase, Alan? When in doubt, pay it out.
Pay it out.
That might be absolutely true. So keep that in mind. We'll be updating you guys. The beauty of this spreadsheet is that it gets updated contemporaneously. This is the 5th version of it, and every time it gets updated, if you've purchased it, you can download a updated version without any additional cost. So that makes your life a little bit easier. One other thing I'll point out, another example is here with these exceptions. Let's say that Sample did let go of a couple people, and they tried to hire one of them back, and the person said, "No, I don't want to come back. I'm traveling around the country, and I don't want to come back." And they give you some written proof, or you can document that in some fashion. You can see that just by adding that one employee, Sample's average FTEs for that 8-week period now become 8.1. That exceeds my reference period, lowest reference period FTE count. Come over here, now I've got 100%, so I automatically get 100% inclusion, and now my loan forgiveness is up to $112,000 instead of the $100,000. And that's why I think it's so important that we mention here that you really got to document that, and you've got to do your homework on these. These are gifts. These reduction exceptions, which are not in the statute, except for the rehire one. The rehire one is a specifically mentioned in the statute, but these other 3 are not. And so these are gifts that the SBA have given us. And I've had a conversation with a lot of people early on who complained to me and said, I've got to keep a poor performer on my payroll so I don't get dinged with the FTE reduction. Well, now we know that's not true. And even the earlier advice would have been, well, maybe you need to get rid of that person and try to hire a better person or a better performer, and then you would have been able to still meet the FTE requirement. Now you don't even have to hire somebody. You just have to document that you've terminated them for cause. They didn't give us any guidance on cause, Alan, as far as I know. Is that correct?
That's correct.
Yeah. But keep that in mind. I know that in an earlier webinar, I think we even mentioned that what if you had an employee that passed away during this period? That certainly shouldn't be counted against you, and we don't believe it is. So you might even be able to add back their equivalency here to meet your to possibly meet your FTE requirement to get up to 100% here. So you can see just two quick examples of how really minor things that the employer does, really three examples that the employer does that could save them quite a bit of money in the forgiveness application. And that is, Brandon, why I recommended earlier that we don't wait till the end of this 56-day period. We be proactive in entering the data on the expense tracker. I've even had some clients enter an entire amount of sample data for themselves based on actual numbers. I had one client that did that and sent it to me and said, can I send this to the bank? I'm ready for my forgiveness. And I said, no, it doesn't work quite that way. You have to put in real data. And she said, well, this is going to be my real data. And I said, well, then just wait till it's done and then you can turn it in. I think people are very concerned about maximizing their forgiveness, and this spreadsheet really shows them how they can do that safely and accurately.
It also allows an intelligent client to interact with the CPA, to get their hands wet, to jump in the pool with this spreadsheet, to learn it on their own. They can watch this video. They can start realizing how important it is to document and to pull together the documentation. Where is the documentation? Where is the copy or lease? Where is the rental agreement? Was it updated to fair market value before the 8 weeks started? Was it oral, so it needs to be memorialized? All of that.
Good morning, this is Kevin Cameron. It is May 29th, and this is an addendum to the original instructional video that was recorded earlier this week for the PPP loan forgiveness calculator and expense tracker. We've made an improvement or an upgrade. We now are working on version 1.6, so make sure if you're using the Excel spreadsheet, you're using the current version, and undoubtedly there will be another version update at some point in the future as well. So keep checking back for updates with your original link for your purchase. So what you see on the screen right now is the one of two FTE calculator tabs we've added to the spreadsheet, or to the workbook rather. The first one is for the safe harbor calcs. The second one is for the Schedule A calcs. But before I even go into those, I'm going to actually take you back to the original worksheet for PPP Schedule A. A little bit has changed there. I'm going to point that out real quickly. When you work on this worksheet, make sure that you always start, when it comes to questions relating to FTEs, and under the current guidance we have, you always want to start in cell B35 on the PPP Schedule A worksheet, because that's really your first litmus test to see if you qualify for a 100% FTE reduction quotient based on your payroll and your employees. So always start there. If you look at that question, it's kind of a confusing question, but that's how the instructions have it worded. If you have not reduced the number of employees or the average paid hours of your employees, really during any time in 2020, from January 1st up until the end of your covered period, or June 30th is what the original instruction was. If you answer yes to that, you don't have to calculate any FTE calculations, any at all. So you have to have proof that you can answer that question yes. That proof is kept with you. You do not provide it to your bank. The instructions clearly indicate that you retain the documentation for it, but it's a self-certifying election on the application presently. We don't know if there will be lenders that will ask for that information or not, but keep that in mind, because a lot of people are overwhelmed by the FTE calculations when in fact they don't have to be, because they probably meet this first true safe harbor. The other thing I want to point out is that on the PPP Schedule A worksheet now, there are formula attachments to the FTE reference periods, but these cells are not protected. You can actually manually change the numbers in these cells if you kept track of your FTEs in another database, or if you manually calculated them already, then you've already got that data and you don't have to use the FTE calculator tabs. But we're hearing from a lot of people who say they need help calculating their FTEs. And also the PPP Schedule A worksheets, where you calculate your safe harbor, which is the first, it's really the second measurement you would have after the first one I just mentioned a moment ago. Here, those FTE calculations are also formula references now, but again, those cells are not protected and you can manually enter in a number. So that's a small change to the main worksheets from version 1.5 to 1.6. So I'm going to briefly go into the FTE calculations. They are essentially laid out the same as the FTE calculations that are done in the PPP Schedule A worksheets. These are your FTE calcs for your applicable covered period, whether it be the alternative payroll covered period or the original covered period. So here you can see all the different columns. We've gone over this before, and I won't drone on about it, but I want to point out that the FTE calculation method you use in this worksheet is essentially the same method you use for the safe harbor and the Schedule A calculations. So let me briefly go into the FTE calcs for safe harbor. This would be the second step you do in your FTE process. The first being the question that we talked about just a moment ago. If you answer yes to that question, you never changed your employee setup, you never changed your paid hours during this entire period from January 1st, you don't have to worry about your FTE calcs. That'll apply to quite a few businesses, I believe. The FTE calcs for the safe harbor, like I said, it's laid out the same as the FTE calcs for the covered period. So there isn't a lot of new things here. The only difference is that we have multiple periods to keep track of, and Congress and the SBA could not make this easy on us. There are a total of 6 potential FTE calculations you have to make. That can be a very time-consuming process. I do want to point out that they gave us a little bit of a gift in that we can count our part-time employees all as a 0.5 FTE. And you'll see in here, in column C right here, if you chose to make that election, and it's an election you have to make enterprise-wide, so you can't pick and choose what period you want to apply that 0.5 to. So just keep that in mind, that if you use the 0.5 election, you have to mark that everywhere in your worksheet as you've elected it. So I'm just going to real quickly run through and show you what happens. When I put in a yes here, you'll see that in the average FTE part-time employee column, every number changes to a 0.5. But don't worry about that, because if the employee is a full-time employee, you still get a 0.1, or you still get a 1 for that person as an FTE. So what the average FTE calculation now does is it just takes the higher of the two. So you really can't mess that up too much. But that kind of helps the employer. And what I'd recommend you do is, if you're on the fence as far as whether or not that can help you or hurt you, you could run the worksheet as is with actual hours, then go back, save that, and then go back in and change make the election and change it to a Y for the FTE election, and you would see which one gives you the best FTEs. And you're allowed to use the one that provides you with the highest FTE reduction quotient. So obviously you want to take advantage of that. You can see that in the safe harbor calculation, the very first one we have is that odd one where we have to tell the government what our FTEs were on February 15th. So what you're going to do is you're going to go to your payroll period that covered February 15th. That could be a weekly payroll, it could be a bi-weekly payroll, it might even be a multiple period payroll. Let's say you pay some of your employees weekly, but you pay some bi-weekly. That gets a little bit unusual if that happens, because then you would have to modify the number of weeks that are counted for this particular employee. Right now, we have it that this company, I'm in the sample company that we went over last time, that they pay bi-weekly. So in the first cell, I have to tell Excel how many weeks are in my pay period, and I do that by entering a 2 here. These cells are not locked, and so you could change a cell if you wanted to for different weeks. So if you have to do that, you can do that, because we've heard from quite a few employers that they don't all pay their payroll in the same pay period. Some pay monthly, some pay bi-weekly, some pay weekly, all within the same company. So I found that to be an interesting observation. But you will have to enter the number of weeks that were worked over this pay period, or this period that covered February 15th. So that's our first test. And what that's going to tell the government is how many FTEs I had on February 15th prior to when this whole mess really started. The second period I have to measure is this 10-week period, which covers from February 15th to 30 days after the enactment of the CARES Act. That's why it's April 26th. And remarkably, that is about a 10-week period, so we're pretty good there as far as our math is concerned. So here, again, you would just put in the total hours for any part-time person during that 10-week period, and it will calculate what the FTE is for that person. We're still rounding to the nearest 10th because that's what the instructions say to do. We don't know if that'll change or not. The last period for the safe harbor is my FTEs for the period that straddles June 30th or earlier. And I want to point out what they mean by or earlier. Let's say that your 8-week covered period ends on June 25th. If you have restored your FTE reduction by June 25th, the end of your 8-week period, then you can use that date. But you have until June 30th to actually do the FTE restoration for the safe harbor. So they give us a little bit of extra time if we need to. So in this case, again, we don't know what the payroll period is for that. So we're going to have to make sure that we put in the number of weeks that we're working for that payroll period in particular. So kind of back to the first measurement that covers February 15th, we're going to have to tell Excel how many weeks are in the payroll period for that straddled period as well. So that, in a nutshell, are the 3 safe harbor periods we're going to have to calculate. So I've filled in the data here for the sample company. I'm going to take you back to the Ppp Schedule A worksheets for just a moment. I'll show you the bottom real quick. You can see that in each one of these cases, I came up with a different FTE number. So you can see the totals. The spreadsheets for the FTE calculations are unprotected. We did that because we are hearing from a lot of people telling us that they need to add additional lines, and so we found it easier just to not protect that worksheet at all. You might also have to edit the number of weeks in here, so that's also something that we felt it would be easier for you to be able to edit that screen than try to lock some cells and unlock others. So when I go back to the Ppp Schedule A worksheets, you'll see that my formulas now bring over those amounts I just mentioned. And in this particular case, because I didn't want sample company to meet the safe harbor, it would have prematurely ended the whole example. I purposely made it so that they don't meet the safe harbor. Remember what the safe harbor is. The safe harbor is I reduced my average FTEs after February 15th, but I restored them by June 30th or earlier. So it's kind of an odd measurement, because what if I never reduced my FTEs? I technically don't even qualify for the safe harbor. I found that to be an odd twist in the statute, because I felt like if my numbers all stayed the same, then wouldn't I meet some kind of safe harbor? But technically you don't, which means you actually have to go to the next FTE measurement calculation. Maybe in a future release of some guidance from the SBA, we'll see some clarity on that. But in Sample's case, their FTEs during this February 15th, April 26th period was 6.8, and their FTEs on February 15th were 6.1. So the program automatically calculates that you don't qualify for the safe harbor, and we have to move on. If in fact that the safe harbor, they did meet the safe harbor, then the calculation would then bring over what the FTEs were at June 30th or earlier, which was this column way out here, 6.5. So in this case, they don't meet the safe harbor, and we have to move on to our next FTE calculation. So our third question is, are FTEs for purposes of using the reference periods? So that's what the last tab is here. Again, we have 3 different dates. Most employers or most borrowers will use 2, not 3, and I'll explain why in a minute. The first reference period is in the statute and it's never been changed. It's a 19-week period from February 15th, 2019 to June 30th, 2019. And again, all the calculations are essentially the same. The only difference is you put in the total number of hours for that period and the system automatically calculates your FTE. If you chose to make the elect the 0.5 FTE for a part-time person, you can see again, it just automatically calculates it for you. So no big issue as far as that's concerned. And again, measuring this under both methods is the wise thing to do, because you want to pick the one that gives you the best ratio. So that's our first reference period. Our second reference period is January 1st, 2020 to February 29th, 2020. Ironically, that's about 8.6 weeks. So they didn't make our life very easy there, because we're going to have to actually run reports for our employees' hours, probably in a period of time that doesn't match up with our payroll records, which we might find that to be challenging. And I believe that's also why a lot of employers and borrowers will likely elect the 0.5 FTE measurement for part-time employees, because what they didn't tell us is how many hours that part-time employee has to work to meet the 0.5. Our interpretation is that if the person works 1 or 2 hours a week or 25 hours a week, they're still considered a 0.5. So it might be a little bit of a windfall for some borrowers to use that 0.5 measurement, especially businesses like retail or fast food or restaurants or places like that, where they might be able to hire back more people with fewer hours and then get more credit for their FTEs. The third measurement period is, if you're a qualified seasonal employer, you can pick any 12-week period between May 15th, 2019 and September 15th, 2019. If you pick a 12-week period between that time frame, and you can pick any 12-week period you choose, obviously you want to pick the one that gives you the lowest number of FTEs, and I'll explain why in a minute. So in Sample's case, I just forced them to be a seasonal employer so we could see the example. Again, all the math is relatively the same. You just have to calculate more hour runs on that, or elect the 0.5 for the part-time employees. So coming back to the FTE reduction quotient calculation, which is in Schedule A. It's not the safe harbor. The safe harbor was in the other schedule. This then brings over our 2 reference period FTEs and asks you if you are a seasonal business. You have to answer this question. If it says yes, then it drops in what your seasonal employee FTE count would have been. And you can see in Sample's case, their lowest FTE measurement actually came in the January 1st, 2020 to February 29th, 2020 reference period. So that's the number that they will use for calculating their FTE reduction quotient. So then I come down here to what my FTEs are for my covered period. And you've probably forgotten by now where that number even comes from. And if you have, that's okay. It comes from the Ppp Schedule A worksheets, and it's in these FTE calculations that we do for the 2 different tables, Table 1 and Table 2. Presently, the Excel worksheet does not calculate FTEs for owner employees, because the current instructions indicate we don't include owner employees in our FTE calcs. We'll have to see if any future guidance changes that. So going back to Schedule A, this number, 5.9, comes directly from the Ppp Schedule A worksheets. It actually comes from above here. It's just an addition of these 2 numbers. But you can see these are all white cells. which means they're formula cells and you don't have to override those or put any information in there. So in sample company's case, we come down to a 91% FTE quotient. That's a little different from the last sample that is in this video earlier, because we tweak some of the numbers a little bit. Don't get confused by that. It's just a change in the sample data slightly. But in this case, it means that after running all the different calculations, answering the questions, running all 6 FTE calculations, we know that sample company has a 91% FTE reduction quotient. So when I go back to the loan forgiveness application, you'll see now that that number is 91%. Here's all my expenses, which came from the expense tracker and my payroll data input. My total expenses were $112,699 now. My loan was $120,000, and now we have $102,000 loan forgiveness. We've added also in version 1.6 a estimated loan balance after forgiveness, which also reduces the loan forgiveness amount by the EIDL advance you received. So this number kind of tells you at the end of the day what your loan balance should be after all these calculations are done. This line is not on the forgiveness application, but we've had a lot of requests from people that wanted to know what the bottom line was, what they would owe after running all their calculations. So that wraps up the addition to the original training video with the new edition of the FTE calcs. I hope this worksheet is helpful for you and results in your maximum loan forgiveness, as that's what everybody's goal should be. Thank you very much.